Thanks for joining us today on The Close. I'm Morella Fernandez. Markets close in 30 minutes. Let's get to the stories we're following in the BNN Bloomberg newsroom. The U.S. trying to bolster the ceasefire with Iran. It says there will be no more attacks by Israel if Iran stops its missile strikes. Tehran has halted strikes. Israel has agreed to halt attacks as well for now. Both countries traded attacks on the weekend for the first time since April. Meanwhile, OPEC Plus will increase its output target next month for the fourth time since the closure of the Strait of Hormuz. The federal government will provide loans to domestic airlines facing significant financial pressures from increased jet fuel costs. Airlines can receive up to $150 million in repayable support. That move comes after Ottawa already removed the federal fuel excise tax from April 20th to September 7th. A federal judge in Massachusetts struck down U.S. President Donald Trump's $100,000 fee for H-1B visa applications. The judge ruled that the fee violates the U.S. Constitution and amounts to a tax that Congress did not delegate to the executive branch. The H-1B policy was created in 1990 and used by U.S. tech giants to bring in high-skilled workers from outside of the country. Markets mounting a bit of a comeback today after Friday's meltdown. TSX up 64 points right now to 34,478. Let's take a look south of the border. Not a material move for the S&P 500. It's up just 27 points or 0.4%. The Dow Jones actually down right now a little bit, and the NASDAQ a 231-point gain, so up almost 1% at 0.9. Apple unveiled Siri AI and other updates at Tim Cook's last annual developer conference. To find out why he's thinking of buying Apple stock right now and other investment ideas, we have Alan Small in studio, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth. So Apple talking today about how it's bringing AI to consumers. You know they've been sort of criticized for not having their own AI policy or their own AI product to bring to the public. What do you like about Apple right now?
Well, I think the potential is there, right? And I think when you look at the tech world, the tech sector, and again, there's so many parts of tech now, right? Whether it's semiconductors, hardware, software, et cetera. You're always trying to find a name that has the capabilities of obviously moving higher, that you think hasn't reached its full potential as yet. Whether or not they're cheap, it depends on what metrics you're using to evaluate the company's shares. But overall, you want to look at something that you could say, hey, I think they're bringing some products to market. They're going to have something that you could get behind, a story that you can get behind. And I think the Apple story works, right? Probably one of the biggest names, obviously, I think, third largest tech name company in the world. But yet they haven't really incorporated AI into their products, as you've said. And we've all been waiting to hear at their conference today, what they were going to say. And, Tim Cook, with his keynote speech, he mentioned what we were expecting. The problem is he didn't really go beyond that as yet. And so I think the market kind of took it as ho-hum and sold off a little bit. Initially, the stock was up 3%. When I saw it last before coming on air, I think the stock was down a little bit. And so for me, I'm still behind the name. I still believe and maintain, yes, some people are criticizing them, saying it was what they had said 2 years ago, that it took them this long to actually bring it to the forefront. Yes. But I still believe that it is a name that I think once they incorporate AI more so into their suite of products with their user base, how many people have iPhones, how many people use Apple products, I think it could definitely enhance the company's profitability. And I believe share price will move higher. Seen a lot of targets, a lot higher than where the stock sits today. So I believe that it's a name that you can start to nibble on, obviously, if you have the risk appetite for a name like Apple.
Let me talk about the other theory that's out there, which is what a smart idea for Apple not to spend all that money on AI and then cherry pick the ones that they want to put into their products when they are ready to do so, which starts now. What do you think of that?
I think it's okay. However, I think because of that, if that was their approach, I think they've missed out on a lot of growth. I think they missed out on a lot of investors wanting to own the shares. Now, make no mistake, Apple stock today is by no means cheap on an earnings multiple basis, trading at well over 30 times forward earnings. So they're going to have to prove themselves. They're going to have to show that these products, like all companies, like Alphabet or Meta or any of the Microsoft, they're going to have to show that by incorporating these AI products into their suite of devices and et cetera, that it's going to mean some great things to the bottom line. And I think it's going to take some time, but at least they're finally moving in that direction.
So Meta down today, Microsoft down today as well. Question is some of this money that's moving around in tech perhaps a setup to the SpaceX IPO later in the week?
That's the fear, right? That's the fear that people are going to sell their winners. They may not be selling Meta or Microsoft. I think they would be selling perhaps some of the other winners that are there, perhaps not selling as yet. We know the IPO is on Friday. And that is the fear, right? That this could be, I've heard today someone say, this could be the top of the market because when SpaceX comes, IPOs, a lot of money is going to go into there from other products, bring down the market. I'm not so sure that's the case. I think there's more than enough money sloshing around out there for money to not only go into SpaceX, but to remain in some of these other AI names. And so I'm not buying that theory. We'll have to see when names like OpenAI and Anthropic go public later this year. I think that will be a question, what money is going to be allocated out of investors' portfolios into those names, and we'll have to see. But I think SpaceX, I think the hype itself is going to carry so much weight. Keep in mind, right, they don't make money as yet. So everybody's just buying in on the future potential of what SpaceX is. It's addressable market. I've heard $16-17 trillion of addressable market. They are pretty much the only player in monopoly in the space. What do you pay for a company like that? That is the question. I guess the IPO price, $135 a share. I'm sure when it opens, that stock price, obviously we can't say guarantee, but more than likely we'll see a surge in stock price. The question is, from history, we've seen a lot of these big IPOs, price goes up significantly and then pulls back usually. Some people might wait for that pullback. Some people might get in early. We'll have to see. But for me, I'm probably going to take a wait-and-see approach and see how the dust settles.
You've noticed that there are two types of investors in the volatile market right now. Tell me what you're seeing.
Yeah, so it's interesting, right? One great market. It's been a great market this year, yet two types of investors, two schools of thought. You have the investor that I've been talking to lately that wants to put every penny they have that they can afford to into this market, try and take advantage of what we're seeing. AI revolutionizing the way we live, period, full stop. And then you have the other type of investor saying, well, look how well the market has done. Look how high it's gone and so fast. I'm nervous. There's going to be a pullback. I want to take out some of the money from my portfolio and put it on the sidelines for now. And these kind of investors tend to try and time markets more so than the other. And I'm not a big believer in that. So I kind of fall somewhere in between. I think you want to trim some of your profits, but move it into other areas of the market that haven't gone up as yet. You mentioned Meta, you mentioned Microsoft, two great names that I think you could buy today. Other names in other sectors, Wells Fargo, a bank in the US, down near its 52-week low. There are a lot of names that are trading near lows. I think it was about a couple of weeks ago, there were actually more 52-week lows made on the S&P 500 than new 52-week highs. So that tells you the focus is very narrow, the breadth of the market is narrow, a lot of opportunity out there. So maybe you want to trim your profits and buy something else. I don't want to get out of the market and necessarily want to let everything ride. Kind of want to take kind of a middle of the road approach there.
Okay. Do have to leave it there, Alan Small. Good to see you. Thanks for coming in.
Thank you.
All right. When we come back, shares of Badger Infrastructure getting a lift today after a bullish call from BMO Capital Markets. Back in a moment. Badger Infrastructure got a rating upgrade from BMO Capital Markets. The firm turning more bullish on the name, pointing to a long runway for growth driven by fleet expansion, infrastructure demand, and data center work. We got more from analyst John Gibson, industrials and Canadian energy services analyst at BMO Capital Markets.
It's undertaking its largest build program this year, adding about 300 trucks. That should increase its net fleet count by about 10%, including some of the retirements that it does. But more specifically, I think the longer-term growth profile of this company remains very strong as you think about a 5 to 10 year, set of demands moving forward. So I think that was the biggest thing for me. I mean, obviously the valuation has risen, and that's what I've been pushing back on the most. But when you think about the forward growth in this company, I'm a lot more comfortable about where the valuation sits now.
And any possible headwinds for that growth that could derail it?
Well, the company has seen some tariff-related issues. It builds trucks at a facility in Red Deer and ships them to the U.S. And it's incorporated some tariff costs this year on the back of that. I think there's always risk for construction companies if you see just a slowdown in activity. But I think what this company has done well, and it's really under the new management regime, is not building too quickly into markets. Like the markets it's targeting are in the U.S. They sort of have 12 key markets, most of which are in major city centers south of the border, and they're being cognizant of not oversupplying the industry. So, from that perspective, I'm a lot more comfortable with what we think is a pretty solid runway of long-term growth for Badger.
Yeah, but with that move into the U.S. and the growing market there, any concerns though with tariffs and the CUSMA and things like that?
Well, I mean, tariffs are changing daily, weekly. I think what we're comfortable with now is there's an expectation for what the costs are going to be. Again, they can change quickly, but in terms of the end market demand, which I think is the most important aspect of Badger and will continue to drive the stock forward, that's pretty clear right now. And in terms of what the impacts could be tomorrow with a tariff change, I'm not exactly sure, but overall, they still have pretty good economics on their new builds because they do it in-house, and that does differentiate them from their peers. And
you mentioned, I think, a 5 to 10 year cycle still ahead. What gives you the conviction for that?
Well, in addition to the construction trends that we're seeing, the utility spending, the infrastructure spending, it's data center demand, and Manage pointed it to be being the cherry on top for their business right now. It's soaking up a lot of excess capacity, and we still see a long runway for data centers being built in the U.S. In Canada, we're a little bit behind. We just saw some announced here earlier this year. I think that build out is just starting, but in the U.S. they're well underway and still have a long running room for data centers, which again does soak up that excess capacity.
And the data centers, I think, we're 10% of their market now. Where do you see that going?
It's tough to say. Like, it'll grow. I think Badger at the same time is being cognizant of not trying to chase work. They're very selective about the customers that they're working with on data centers, but it will grow. There's no doubt. I think what they just want to make sure is they're not, or that they're continuing to service their existing customers, because those will be their, when this boom ends.
And U.S. and Canada focus. What about Middle East infrastructure exposure factor? Any concerns there?
None for Badger. No, it's North America focused, and most of their growth is in the U.S. here.
All right, and now you're not worried about the stock price. I mean, it's up almost 100%, I think, in the last year. Is that what I was looking at? And year to date, it's up 28%. And you still see room to grow?
I do. And admittedly, I've been on the sidelines for the run. Part of which was I thought the barriers to entry for the business were relatively low. But what you kind of find out covering these companies is companies with scale, companies with a good service offering, can continue to grow in good markets, and that's why I'm comfortable even with the run where it's at and the valuation where it's at. The growth algorithm built into this thing over the next few years is pretty substantial.
And thoughts on the new COO, Logan Mellott?
I think in general they have a very, very strong management team. That includes the CEO Rob Blackadar, who came in 2022. Again, just focused on not overbuilding into markets. The Badger of old, call it pre-2014, where most of its revenue was generated in the oil and gas industry here in Canada, experienced that. When you're too levered to one industry and that industry falls off, you can, your business can really suffer on the back of that. So yeah, I think just in general, the management team of Badger has been very impressive over the past few years, and I expect the same thing moving forward.
All right, and go back just to the data centers. Other opportunities? Any other sectors that you can see them getting into and growing?
They kind of touch all sectors right now, to be honest with you. I mean, construction, utilities, infrastructure, transportation. So it's a company that I think has seen greater adoption of hydrovac usage, especially in the U.S., and that's kind of touching on all industries. So there really isn't one area that they're not in right now or could grow into.
John Gibson is with BMO Capital Markets. Canadian farmers are already paying more for fuel and fertilizer, and now they're dishing out to replace copper wiring that has been stolen from their properties. CTV's Alex Carper has more.
This is the pivot irrigation system.
Copper wire from this pivot irrigation system was stolen from Rachel Proden's farm in southern Manitoba, leaving it unusable.
We were thinking it's going to be around that 20 grand that we're going to have to spend to fix it.
The damage hasn't stopped there. Proden says the copper wire in one of her corn planters was also stripped, completely destroying the equipment in the process. She says they were forced to buy a new machine, which cost them around $50,000 to replace.
Looking at replacing stuff when you weren't, those weren't in the budget this year. So looking at that, it's very frustrating and kind of nerve-wracking.
Proden said this recent theft is extremely frustrating and could have a significant impact on her farm. In response to similar situations, others in this region have already taken drastic security measures to help prevent further crime.
So you can see there we are in the camera there.
Near Elm Creek, around an hour from Winnipeg, Colin Penner has installed security cameras and additional lighting around his property. He says the recent rural theft is troubling.
Rural theft, it's a big thing, right? We depend on our tractors, our trucks, and our equipment for our livelihood. And when they disappear on us, it can really impact how we can do our job.
Manitoba brought in the Scrap Metal Act 4 years ago that bans the sale of stripped metallic wire without proof of ownership. But Proden says more needs to be done.
The fact that there's somewhere that somebody can sell this copper wire to is frustrating.
Proden and other farmers are offering a $10,000 reward for information that leads to the arrest and conviction of those responsible for the recent thefts. Alex Carper, CTV News, Portage La Prairie, Manitoba.
Time for a quick break. We're back in a moment. OPEC Plus agreed to increase output in July, even though the U.S. war with Iran has continued to disrupt exports. Let's talk to Eric Lee about this. He's global energy strategist at Citi. Eric, thanks for joining us today.
Hi, good to be with you.
Is this scheduled increase in output really just on paper? I mean, how likely is it, given that the Gulf is in the situation it is with the Strait of Hormuz?
Yeah, as you say, it is on paper. The production will not be able to rise until the strait reopens, which, of course, as we know, requires a lot of other steps to take, and the ongoing military and diplomatic difficulties between the U.S., Israel, and Iran. In the meantime, Gulf producers are lower by about 10 million barrels a day since before the war. So the reality in terms of actual production and, of course, what can leave the strait is going to be a lot lower. However, it does have some meaning. At a point when the strait begins reopening, there'll be, I think, two things that might mean that a bit more supply comes out of OPEC and OPEC Plus. One is UAE, who left OPEC Plus recently, and I think will be keen to flex their spare production capacity that they've been expanding for a while and has been held back by OPEC Plus quotas until now. Again, pending the strait reopening and geopolitical risks. And then the second thing is that OPEC Plus itself, its members, will have will have more free reign to produce higher than they did before, presuming that physically they can. And in many ways, the slate will be cleared for some of the producers before who were overproducing, because they're allowed to compensate for that.
That being said, how many producers have had to turn down the taps or completely turn off during this time?
All of them within the Gulf.
Okay.
All of them within the Gulf, right? For a total about 10 million barrels a day. Now, some have had a bit more success in, maybe not success, but they've had alternative routes. So the Saudis in particular have a 5, perhaps even, on paper, 7 million barrel per day pipeline that goes east-west, allowing them to export from the Red Sea. But the Red Sea could be at risk as well if we see the Houthi groups in Yemen start to threaten Red Sea and Bab el-Mandab Strait flows as well.
Have the other producers in the OPEC group, Russia, for example, Kazakhstan, have they been able to make up the gap?
Well, they themselves, of course, are subject to the quotas. I think importantly, of course, Russia, the Russia-Ukraine conflict continues. And among all of that, Ukraine has been able to hit various Russian targets in terms of oil infrastructure, refineries. That's held back somewhat Russia's ability to produce and export that oil.
You mentioned, of course, Saudi Arabia has an alternative route that they can use. What about the other members in the Middle East? Are any of them looking to invest in other shipping routes, or is it too early for them to do that?
Absolutely. So, I mentioned the Saudis, but the UAE, for instance, also has an alternative route to bypass the strait and go to Fujairah, which they're also using. And then from Iran's side, they have a pipeline out to Jask. But of course, we have heard in recent weeks plans to build new pipelines or expand them. So the UAE and I believe Iraq as well mentioned doing that. It'll take a bit of time. There's going to be a lot of interest in trying to bypass the strait. Pipelines, though, are still strategically vulnerable infrastructure potentially.
So we've had a lot of discussion here about the price of oil and why it still remains, under $100, even on a day when, just 24 hours ago, Iran and Israel were trading missiles. What do you think is keeping the price of oil where it is? And do you think, since summer in North America usually moves to a higher demand, that some of that could dramatically change in the next month or so?
Yeah, so we do think that risks are skewed upwards, especially going into the summer. One reason is we do think that this deal-making process and the military and diplomatic aspects of this could drag longer. But there's also this question of, as you say, why aren't oil prices higher? We've looked at this a lot, and this has been a big question across these markets. I would say out of a number of factors. One was that we began the year and before the US-Iran war with very, very high levels of global oil inventories. We were building a lot last year, and we built really until the end of February as the war began and the strait closed. So we have a much larger cushion that has been falling as the supply disruption has been setting in. But we did start from a sort of large cushion. A second one is that the SPR, the IEA emergency release of oil, of which the US was about half of that, but 400 million barrels, that has been released at potentially a rate of about 3 million barrels a day as we're recently. That's making it, taking a lot of heat off of the commercial storage and physical markets in terms of commercial stocks. That could end by the end of July. So get to that point in time and we could feel a lot more pressure on commercial stocks to need to draw down to meet this supply deficit.
Okay.
And we'll need to see if the IEA is willing to release more.
Yeah, I think that has been a point of discussion for them. Eric, got to leave it there. Thanks for joining us today. Coming up next, the closing bells on Bay Street and Wall Street. Here are the closing bells for the end of the trading day. At the NASDAQ, Mike Ware ringing the closing bell. In New York, it's Man Group with the honors. You're watching the close on BNN Bloomberg. I'm Morella Fernandez. Here's how we ended the day on Bay Street and Wall Street. The TSX Composite gaining about 65 points by end of day, so up about 0.2% to 34,478. The S&P moving up just 21 points today. The NASDAQ moving up 0.9%. That's a 220-point gain on the day. Let's have a look at the movers in Toronto. We'll start with Birchcliff Energy, which is a gainer of almost 7% today, or 45 cents per share to $6.91. Arrow Copper, also a gainer today. It's up 4.4% or $1.59 a share. It's up 73% over the last year. TerraVest Industries also moving today, not getting too much, 30 cents a share, taking it to 108.70. And having a look at Vizsla Silver, it is a gainer today, about just short of 2%, 1.92% or 9 cents a share. In the red, we have Go Easy. It is down 4.5% to $38.69 a share. And then Saputo, also down today, 3.6%, despite having CIBC raise its price target to $49 from $47. Curaleaf has been bouncing around for some time. They are down at 3.8% today, or 61 cents to 15.60. Let's get to some of the movers south of the border. Bloomberg's Avalon Purnell joins us now with more on that. Intel, a big one today for the S&P Avalon. What happened to push it up?
Yes, Intel was up about 11% into the close for its best day in about a month. And that's after a report that Google is placing an order for more than 3 million of Intel's chips. And that's another step in the right direction for that CEO, Lip Bhutan, who has been saying for a while that he's been wanting to get more customers for Intel's chips. And potentially, this is what investors have been wanting to see for a while, especially when you're kind of looking at how exactly is this turnaround looking. Looks like it's in a positive direction right now.
Okay, obviously, Washington took a stake with Intel. That has been driving a lot of the momentum here. Tell us where they are as far as this turnaround goes.
Yes, absolutely. As you mentioned, they've been up more than 200% since the U.S. government took a stake in the company. However, there's been a lot of other things that have also happened. Just 2 months ago, Intel hit a new record high, and that was after releasing a forecast that really just blew investors away. They also, just last month, we had a report saying that Intel was potentially going to enter a preliminary agreement with Apple to potentially provide chips for that company's devices as well. All, again, great data points in the right direction for Intel's turnaround.
All right, let's get to Tango Therapeutics. They surged to a record high as well. What spiked the stock?
Yes, Tango Therapeutics released some new data today on their pancreatic cancer drug, more specifically their combo drug that mixes their own drug and Revolution Medicines therapy. And to say the least, investors were really excited about that. Leerink writing that the data exceeds expectations, noting that the efficacy specifically really speaks for itself. And Tango is now planning to use that drug to potentially take it into the final stage trial to see if this could get accepted by the FDA and others in the future.
All right, we will leave it there. Bloomberg's Avalon Purnell with the latest out of the U.S. Thanks for that. Up next, stocks rally as oil prices ease after Iran said it had stopped strikes against Israel. More in a moment. Stocks rallied and oil prices checked their march higher after Iran said it had halted strikes against Israel. For more on the market movement, let's go to Christopher Davis, partner at Hudson Value Partners. Thanks for joining us today.
My pleasure, Marilla. Good to be here.
So the ceasefire we know is shaky at best, has been for some time. How do you see oil prices behaving if the back and forth does continue?
If the back and forth continues in this period where we've really felt like we've just been sleepwalking forward comes to a close, I would expect energy prices and oil prices to move up. I mean, we've had a lot of discussion over the past 2 to 3 months about running out of oil, drawing down those supplies. And although the market has done a really good job of finding supply and balancing things out, and we've had some demand destruction along the way, that can't last forever. And I think we could be getting closer to the point where if we don't get that straight to reopen in the next few weeks, you could see those prices move higher, particularly as we go into summer driving, summer travel season, increased energy demand from the warmer weather.
Markets did a deep dive, of course, at the end of last week, did a little bit of a comeback rebound today. But with the Iran war and what is expected for inflation, do you see that as playing into the volatility, or is this about the tech sector and valuations and big IPOs?
I think it's a little bit of everything, but I think the driving factor last week was just that big tech had really a move that was probably too far too fast. And as investors start to realize that inflation is most likely to be sticky, probably closer to 3%, that has the potential to put a damper on equities because we probably aren't going to see those rate cuts that investors had been hoping for before. Couple that with the new IPOs that are coming out, whether it's SpaceX this week, Anthropic, OpenAI, and all sorts of other deals. And there's just going to be more stock, more equity supply out there for the same amount of dollars to get spread around. So we think all these factors could conspire really to put a lid on valuations for a while.
I was going to say, do you see competition there? For example, Alphabet's share sale, they want to raise $80 billion. Will that compete with the big SpaceX IPO?
I think it was a brilliant deal by Alphabet, and I think it shows you that smart CFOs out there are realizing that there is going to be competition for equity demand, and Alphabet did a really good job of getting out there in front of it. I mean, they sold stock at pretty much more than twice the average price that they had bought it back in the past 3 years. So great job of corporate finance, and I think we probably see more of that.
The S&P changing it up a little bit, getting a little more tech-heavy. Marvell Technologies in, Campbell's is out. Do you feel like the other sectors here just keep falling more and more behind that heavy tech?
Absolutely. Some of those small sectors, whether it's staples, materials, even energy, are at a point where they're rounding errors in the index. And although that S&P 500 is supposed to be this great group of American companies that represent the biggest companies, I would like to see it be a bit more diversified. I think the problem right now is some of the big companies have gotten so big. 97 companies in the index right now don't meet the criteria of market cap, an $18.5 billion minimum market cap. So I think we're going to continue to see more turnover in the index.
All right. We're seeing Apple have its worldwide developer conference today, the last for Tim Cook. Investors didn't really seem to be impressed by what was going on today. But do you expect to see more integration with AI under their new CEO or bigger changes moving forward?
Yeah, I do. I think it's important to remember that Apple is, best described as a fast follower. They're never that first mover, but they tend to do it better. And that's been the secret sauce to them over the years. And while there are a lot of great AI products out there that are on the bleeding edge, they're not necessarily ready for mass market adoption. And I think Apple's going to have the last laugh, whereas the other tech companies have spent hundreds of billions, approaching trillions of dollars on AI. Apple spent comparatively little. They've got a partnership with Alphabet, and they're putting together a suite of products that are going to be accessible and usable for the average everyday user. And they have a really great suite of hardware for AI at the edge, whether it's your iPhone, the Mac Minis that people love for running agents and OpenClaw and things like that, as well as their higher end hardware.
Do you think it makes sense, as Apple has alluded to allow consumers to choose which AI they want to use on their phones, or is that going to get just too complicated?
Well, I think what's interesting is that there isn't necessarily a standard that's developed. We're still in this very competitive period between OpenAI, Anthropic, Gemini, Copilot. There isn't, it's almost like we're in a VHS, Betamax, Blu-ray, DVD type situation where we have all these different AI tools, agents, languages, tools, but there hasn't been a clear standard for people to unite on. So I think it is right to let the consumers choose and battle it out and see which one's going to rise to the top and which ones are going to develop as the right tool for the right job.
Because we've seen investors sort of running to pick up tech every chance they can, a lot of the other sectors, as we talked about, are beaten out. You like McDonald's right now?
Yeah, we do. I think there was some great news over the weekend from their global franchisee conference, and they talked about their implementation of AI. And to some degree, companies like McDonald's are subsidized by all the spending that the likes of Alphabet are doing because it makes these great AI tools much more accessible and usable to them. So McDonald's is on a path to add a Google Cloud AI server to all of their restaurants that are going to drive their Arch IQ program, which is going to have AI-enabled ordering. It's going to have all sorts of restaurant and kitchen management technology. And we think it has the potential to drive a lot of efficiency gains, cost cutting, and it's a great example of what this technology can do for industry. Couple that with some menu improvements, and we think it's exciting into the fall.
I feel like if I rolled out AI for McDonald's, I'd get a McChicken instead of getting the Big Mac I ordered, and that would be the problem in the beginning. Okay, let's get quickly to the other stock you like right now, healthcare company Amgen.
Yeah, same theme of a company being able to capitalize on AI. The healthcare sector has picked up some ground last week as tech started to pull back. Amgen's got these 11 key trials and event readouts for the rest of the year. And what's really exciting about Amgen is their Maritide drug, which has the potential to have dosage in the 2 to 3 month frequency as opposed to weekly or monthly for weight loss and diabetes management. And it's a great healthcare company trading at about 15 times earnings. And we like it because it's a way to get biotech at scale into your portfolio with a great healthcare development pipeline.
Christopher Davis, good to have you. Thanks for joining us today.
Thank you.
Coming up next, we'll get a little bit more into Apple after their Worldwide Developers Conference. We'll take a look at the new AI-powered Siri when we come back. Apple stock ended the day about 2% lower. Investors had been watching the iPhone maker's developer conference, where it announced a new AI-powered version of Siri. Let's get more from Gil Luria. He's managing director, head of technology research at D.A. Davidson. Thanks for joining us today.
Thanks for having me.
So what's your take? Were investors underwhelmed?
I think investors expected correctly that Apple would make progress in incorporating AI into its operating system, but they weren't dazzled. And I think there's still a level of skepticism that what we saw today will actually be available in its entirety, the way it worked smoothly in the demos. So we got what we wanted, but we're now skeptical or at least cautious about how quickly will all this functionality come out. And they've already told us it's only going to come out really in the US. It won't come out in Europe. It won't come out in China. And so the rollout in the fall is going to be more important. But having said that, what Apple showed today was they're starting to deliver on that promise of making AI a personal assistant. The main weakness for Siri has been that it wasn't incorporated into other applications. And that's what today's presentation was about, how they're using AI to incorporate Siri into other applications, into our contact, our calendar, our email, our messages, in order to carry out tasks on our behalf when we interact with Siri. If they can deliver on that, consumers will be happy and they're more likely to upgrade their iPhone.
Okay, so you can say to Siri, look at my last email from Joe Blow and tell me what he had to say about this, and it should be able to answer by pulling up that email.
And even do things like, if Joe, even without a last name, talked about a particular restaurant, can you book us a table in a week right before we go to the game together? That's the level of integration we want from Apple. That's what they demoed earlier today. So understanding the context of who you are based on your contacts, your calendar, your messages, and being able to execute tasks based on that context. Okay. If they can do that, it will feel like a personal assistant.
Siri is going to use Gemini to power some of what it will do. Is this a new opportunity for Google to gain some more strength against its competitors, OpenAI, Anthropic?
So I'd say it's better than them not being the provider for Apple, but the scope of this relationship is not nearly as good as the exclusivity they have in search. Right? In search, when you go into Safari on your phone, into the browser on your phone, you search, you're automatically in a Google search and you see that it's a Google search. In AI, Apple put Google behind the curtain. They put Gemini behind the curtain. They're using a Gemini-like model behind the scenes, and they're using Siri as the consumer interaction. And so now you feel like you're dealing with an Apple application, with an Apple Search, Spotlight, Siri, even though it's powered by Google. So that's not nearly as good for Google. It also means that at any point, Apple can decide to swap Google out for OpenAI or for Anthropic if those have a better model, and ultimately introduce its own model or an open source model behind the scenes. Because if the consumer is habituated to dealing with Siri and with the Siri app, they're not dealing with Gemini, they're not dealing with ChatGPT, they're dealing with an Apple interface. That gives the control back to Apple, even though they are using technology that's currently coming from Google and Gemini.
Interesting. Okay. Apple's also introducing an agent that can update weak or compromised passwords across websites. What do you think of this? Does that technology or an app that does that already exist?
Security is a cat and mouse game. And the hackers keep getting better at finding our passwords and exploiting them. And Apple and Google Android and PC makers, Microsoft with its Windows, et cetera, have to constantly figure out how to outsmart those hackers. And this is a neat little tool that will be able to not just tell us if a password's been compromised, which it's been doing, but also fix it and replace that password. So next time we log in, we'll still be able to log in using our device in spite of the fact that the password had changed. So it's a neat tool that the hacker, the mouse that is the hackers will figure something else out, and the cat that is Apple, Google, and Microsoft will have to figure out something else down the road as well.
Okay, so we talked about the updates to Siri. We talked about passwords. Was there anything else that impressed or stood out for you from the conference today?
That they mentioned that the AI models are going to run on device. This is very significant. Up until now, almost all AI that we use, all the tools that we're using, are hosted in a cloud, in a data center. The more functionality they can put into the device, the faster it's going to work, and the more the data centers are going to be there to deliver more computationally intense requests, and that'll make the consumer experience a lot better. And they demonstrated that with photo editing. They can do a lot of the photo editing, even though it's AI enabled, on the device. And only when you're done and you want to render the image, the complete image, will it go to the cloud to do that. So that's a very big step for Apple and for AI, that you can do more of this functionality on the device.
You've maintained a neutral rating on the stock. Are you waiting to see if they can deliver after that initial rollout in the fall?
And more importantly, if this drives iPhone adoption. We are in the midst of a big iPhone upgrade cycle. The double-digit growth in iPhone sales this year, it comes after 4 years of stagnant growth. The bad news about a big upgrade cycle is that you always have the next year where you're comparing against a big upgrade cycle. So if this AI functionality is not enough to drive another upgrade cycle or an extended upgrade cycle into next year, we may see negative growth in iPhone next year, and that's a risk we don't think investors have fully reflected yet.
Gil Luria, good to have you as always. Thanks for your time.
Thank you.
Up next, can Canadian industrial chemicals company Chemtrade gain from a surge in demand for semiconductors? The CEO will join us when we come back. Chemtrade Logistics, the Canadian industrial chemicals company, is a leading supplier to global makers of advanced semiconductor nodes. It also supplies water treatment chemicals to about 1,000 cities across Canada and the U.S. and expects those segments to be key drivers of future growth. Let's go to Scott Rook. He's president and CEO of Chemtrade. Thanks for joining us today.
Thank you, Marilla. Thank you for having me today.
So I know you produce a number of different things. Ultra pure sulfuric acid is one. It's used in the chip sector. Have you already had a demand boom there, and how are you preparing to meet future demand?
So we have recently upgraded our quality levels at 2 out of our 3 ultra pure acid plants in the U.S., and we have been ramping up those assets, and we are currently selling our ultra pure acid to 2 of the chip producers, and we're working with all of those. So we are seeing a significant uptick in demand, and I think over the next 2 years we'll see even more rapid increase in demand as we sell out our new capacity.
Can you explain to us what it's used for?
Yeah, sure. So the final step of chip production, the fabs basically wipe off the computer chip with ultra pure sulfuric acid, and that removes all of the impurities. And so right before it gets packaged and then shipped to their customers, they wipe it clean with ultra pure sulfuric acid.
Interesting. Okay. Water treatment solutions, also part of your business, about 30% is what I understand. What's driving demand for this segment?
So what's driving demand for that? Well, I'll say over the past 5 years, we have more than tripled the size of our water treatment business. We've done that by adding capacity of new products, working on reliability and efficiency. We've also made acquisitions in this business. But as we look forward and think about growth in the business, tighter regulations across the market is driving growth. We'll see oil and gas has greater demand for water treatment, the poultry market, and also data centers. Those are all industries that are demanding more water treatment chemicals.
Okay. What are the other products that your company produces?
Yeah, so in addition to that, we make sulfuric acid, and we supply that to the gasoline industry, to oil and gas. We also make a group of products out of a plant, caustic soda, chlorine, hydrochloric acid, and we sell that into Canadian pulp and paper, water treatment, and then the fracking industry. And then finally, we make a product called sodium chlorate, and that is a bleach that gets sold to the pulp and paper industry.
So, Scott, because of the Middle East conflict and the fact that you make something that is added to fuel, has that part of your business dropped?
So that we are expecting that the conflict in Iran, as bad as this may sound, that could be an advantage for us. And so here I'll tell you why. In our electric chem business, 70% of our variable cost to produce our products is tied to electricity. And our plants for our electric chem products sit in Canada. And so our electricity is Canadian hydroelectric power. And so we compete with companies both in North America and with companies in Asia, and their electricity is a mix of natural gas and others. And so as natural gas prices go up and energy prices go up around the world, I think I like our position with Canadian hydroelectric power.
Interesting. Okay. I also know that net earnings were down $23.7 million in your last year. Why is that?
We have a turnaround. So basically, our largest plant takes a turnaround every other year, and so that's the number one reason for that our earnings have been off a bit. But if you look out over the past 5 years, we've had significant increase.
Interesting. Okay, let's talk about what's going on in BC. You've applied for rezoning for operations you have in North Vancouver, but that was rejected. What did you ask for, and then what is Plan B for you?
Well, so the Plan B, after the District of North Vancouver voted back in April, they did vote no. We went back to the table with the district members, and through negotiations, we made some modifications to our proposal.
What did you ask for, Scott?
The mayor supported us, and then they voted. They recently voted 5-2 to reconsider our proposals, and then and that is moving to the next step, which is going to be next week on June 16th. That there will be more public hearings.
Can you outline what the request was for?
So the changes that we made were primarily tied into basically the issue of perpetuity, which is what the mayor had addressed. Our previous proposal was going to give us, if we made safety upgrades at the site, then we were going to have approval from the district to operate and produce chlorine at that site in perpetuity. And so probably the biggest change that we made was tying that more in line with the length of our next lease agreement with the Port Authority. If
it doesn't go through again, how much of a challenge does that pose for the company?
So if it doesn't go through, if it doesn't pass, there's a couple things. It is possible that the province in British Columbia could overturn it. So that is a possibility. The other possibility is that we could shift our focus away from producing liquid chlorine, and if there's a pickup in demand in Canada for more oil and gas and fracking, then we could convert some of that chlorine capacity to make hydrochloric acid, and that gets sold again to the fracking industry. So if there's a significant pickup in demand, there could be an opportunity for us to make more hydrochloric for fracking. All right, Scott, I do have to leave the conversation there. I'm out of time with you, but thank you for your time. Scott Rook is President, CEO of Chemtrade. Up next, the World Cup starts, of course, this week. Bloomberg takes a closer look at the cost in just a moment.
FIFA will make billions of dollars from this year's World Cup, but dynamic ticket pricing and mounting costs are leaving ordinary fans priced out and host cities under financial strain. Bloomberg Originals takes a closer look.
So, you want to go to the World Cup. Well, it's going to cost you.
I don't think we're going to the World Cup anymore, bro. They're cheapest, $7,000.
Original purchase price $446, resale price $22,316. It's insanity.
The World Cup's return to North America will be unprecedented in more ways than one. It's the first FIFA tournament to take place across 3 nations, with 16 host cities in the US, Mexico, and Canada.
This is the first tournament where we're going to have 48 countries represented instead of 32. That means there's going to be 104 matches played.
It's also the first World Cup where tickets are subject to dynamic pricing, and that's changing the game, so to speak.
What dynamic pricing means is that prices change, could be on an hourly basis, on a daily basis, or weekly basis, depending on supply and demand.
This is something that we are used to seeing in the U.S., but around the globe, this is the first time they've ever introduced something like this.
The U.S. is the ultimate market, and FIFA's using that to their full advantage in this tournament.
We have to apply market rates. This is the World Cup.
You have a lot of resale, a lot of speculative buyers going in there to later try to sell for a markup. And so the big question I think people have is this demand real?
And ticket prices aren't the only obstacle for fans.
If you're coming to see some soccer, we want them to come, we want them to celebrate, but when the time is up, they'll have to go home. Don't overstay your visa.
Trump's policies on immigration and tourism have proved to be very hard for some people from specific countries to get visas to attend the tournament. It has said to put some people off of wanting to visit here.
And if people can't or don't attend the games, then what seemed like a profitable event for host cities could turn into a financial black hole.
Financial fallout could be anywhere from $100 to $200 million. That's the cost for a host city.
The World Cup will have a winner. One team will take away the trophy, but some of its losers may never actually set foot on the playing field. Football, well, technically soccer, since we're in North America this time round, has finally come into its own in the US.
Soccer has seen a massive growth over the last 30 years since the World Cup in 1994. Now one of the biggest stars in the world, Lionel Messi, plays for Inter Miami. Their business grew an exponential amount.
The league is now 30 teams. The value of the enterprise is over $20 billion.
But at the same time, they aren't on the par of other sports leagues in the US. So this is really the moment that they have to capture the world audience, to capture the US audience.
The US market, coupled with other advantages, makes it an attractive and lucrative location for FIFA.
FIFA comes over and they visit where people want to have the games, they visit the stadiums, and that's how they decide where it should be and if they have the right facilities and they have the right infrastructure.
The good news about the United States, Mexico, and Canada is we have the facilities already. Although FIFA requires there to be some modifications to them, we didn't have to build the facilities from scratch.
But hosting the World Cup is notoriously complicated.
Host cities want to host the World Cup because of the economic impact that they will get back. New York alone expects about $3.3 billion in economic impact. Dallas expects about $2.1 billion. LA around $1 billion. Expectations aren't always reality, and these economic impact numbers that FIFA and the cities come up with are typically inflated numbers. They end up fronting the bill, and FIFA really just takes all of the revenue from the games.
Looking at costs and revenues from 14 past World Cups, shown here in blue and orange, a clear pattern emerges. Nearly every host nation lost money. Russia was the only exception.
If you're a host city, you sign a contract with FIFA, and that host contract requires the city to take care of all of these needs. Security is one of them. Transportation is another one. Producing fan fests in the city is another major expense.
They grab a park in the city where they'll pull up some big screens, and in theory, that's a place where fans can go free of charge, watch games, have a good time. But what we're already hearing is that some cities, under the financial constraints they have, are considering charging for the fan fests.
The U.S. government agreed to hand out $625 million in federal funding to help with security measures across all 11 host cities in the U.S.
That's a good chunk of money, but it's not nearly enough to deal with the potential security problems. If you have that cost on one side and on the other side you have essentially zero revenues, then you have a net loss of that amount of money. Now, some of that money will be defrayed by local sponsorship deals, private donations, but the balance would be defrayed by the taxpayer.
And if the crowds do show up, this will also strain local transportation. And that's another area where municipalities are trying to make up the difference.
To get from New York to the stadium in New Jersey, a round-trip ticket is going to cost about $100. It's been reduced from $150 after backlash.
This is up from $13, a regular price for this ticket in a non-World Cup day.
Cities are somehow trying to claw back some of the investment that they've made in the tournament, and it remains to be seen whether they're going to kind of squeeze the fan enough to get some of that money back and not have to pass anything on to taxpayers. FIFA's limiting parking spots so that they can have more infrastructure around the stadiums, and that means that the few spots that are left are going for premium prices.
For international fans, it's a whole other ballgame. Airline prices have soared, and politics is not helping. For this fan in Senegal, the red tape to get into the US has reinforced a perception that it's a hostile environment for visitors.
J'avais un rendez-vous tout à l'heure à l'ambassade des États-Unis pour déposer mon visa. Donc, après avoir fait toutes les formalités, payé en fait les frais y afférents, le visa m'a été refusé. C'est une déception, hein? C'est une forte déception pour moi, parce que je ne pouvais pas m'imaginer que cette Coupe du Monde-là ne me trouvera pas en terre américaine. Hein? Parce que moi, bon, je n'ai aucun intérêt à partir aux États-Unis, à fuir ou bien à rester là-bas. C'est inadmissible.
There are already groups of thousands of people who have signed petitions that say they've gone to all of the World Cup games in the last 20 years, but they're not going to the United States because they don't like the immigration policies that have been set by the Trump government.
No American president has ever had the chance.
Ironically, Trump himself professes to be a soccer fan. And Gianni Infantino, the president of FIFA, has made a point of cultivating this interest.
Infantino and President Trump have a very, very close relationship. Infantino has gone to the White House many times.
Infantino created a new FIFA Peace Prize, and he gave it to Donald Trump after Donald Trump complained about not getting the Nobel Peace Prize.
And who knows, maybe such flattery helped smooth the way for the Iranian team to participate in the Games.
Iran will be participating at the FIFA World Cup 2026.
Did Johnny say it?
He did. What did they
Johnny
say?
Infantino, that's a piece of work. You know what? Let him play well. Johnny's fantastic. You know, he's a friend of mine.
For Trump, this is more publicity, right? He's going to be there in the stands. He's going to be seen as someone who's, partly responsible for putting on this massive tournament, these 104 Super Bowls, as Infantino's said.
The equivalent of 104 Super Bowls means turbocharged revenue, and for FIFA, that appears to be the point.
FIFA is going to earn over this 4-year cycle that the current World Cup will take place in something like $13 billion.
That's a 5-fold increase compared to the period ending with the 2006 World Cup in Germany. To be fair, FIFA is a non-profit. It says the money left after operating costs gets reinvested into growing the sport around the world.
They divide it up amongst the world's national soccer organizations, and they spread it out so those organizations can exist and can develop youth soccer and adult soccer in their countries.
A huge chunk of their revenue, like with most sports, comes from broadcast rights, which are expected to generate about $3.9 billion this year. And the fact is, a lot of people will be watching the games on TV because of those dynamic ticket prices.
FIFA's also organized its own resale platform, and they're going to take commissions from both the buyer and the seller, and that's just going to add to the revenue.
Even FIFA's process of seat assignment is being questioned over concerns some who bought tickets aren't getting what they paid for. It's another yellow card for an organisation that is no stranger to money scandals. FIFA hasn't been totally tone deaf to price concerns. Following a global backlash, they added a $60 ticket option for some of the World Cup team's most loyal fans. But these cheaper tickets will make up less than 2% of the total. So, attending the World Cup final may mean you have to inhabit a certain kind of world, namely a corporate one.
These World Cup packages, it's not something that normal people can really afford.
Exclusivity threatens to derail the games, especially in the US, where soccer isn't necessarily ingrained in the hearts of sports fans.
If you did this in a country where football is the #1 sport, I dare say there'd be some kind of potential for a bloody revolt.
A lot of people I've spoken to said there are risks for some of the stadiums to be empty for games where two countries are playing each other that don't have a large diaspora of fans in that area. The reality is some of these tickets might end up dropping very close to the tournament because the last thing that FIFA wants is for the broadcast to show empty stadiums.
Soccer penetrates a culture, and if its presence is reduced, it becomes less desirable. And so how do you have a mass base if the masses can't afford to go to the games?
Canada is making a multi-billion-dollar bet on artificial intelligence. We break down what it means for innovation in this country when we come back. Canada helped pioneer the AI revolution, but many argue it's failed to build the computing infrastructure needed to keep its talented companies at home. The federal government now is trying to change that with its new sovereign AI compute strategy. We got more from Sami Kibria, CEO and co-founder of FlexGrid.cloud.
It's really tied to how do we look at the vision of what Canada wants to do from a sovereignty perspective, from a capability and capacity view. It's all here. I can actually vouch for that. I am a Canadian. I graduated from the University of Manitoba decades ago, and I live in the US, and I'm bringing it back to Canada because Canada already has everything. It has everything, and it just needs that policy in place to show that it's a country that wants to lead in that space, and it's doing that, and now it's amazing to see.
Okay, so it's really the policy that was missing, and now the government's trying to get on top of that. It's framing this as a sovereign AI strategy. What does sovereign AI actually mean?
Sovereign is not only about a geographic placement, it's actually about control. So if you're building something, you may not have all the components in place to build it because there's obviously manufacturing and deployment in different ways and different scales. But once you build it and you own it, so after you purchase it, you want to be able to control that. So no matter who the individuals or the companies are, you want to make sure that that strategy encompasses the control of it. Now, there's the physical side of it that we can see when things are being built. There's also the other layers that actually go into the AI strategy itself. Everybody talks about models and, hey, what is intelligence? So not only does Canada have to own and manage the physical infrastructure, they may not build everything, but they have to own it and manage based on the geographical context. But they should also, which they have the skill set for, around where and how you deploy your frontier or foundational models that the country owns. And I can tell you across the board that any Canadian that graduates from any of the amazing institutes on the AI side gets hired really quickly, very fast by any country in the world.
So then, correct me if I'm wrong, that has been a fair concern in the past, right? One criticism is that Canada has funded infrastructure that sits on Canadian soil, but it's actually controlled by foreign companies. Is that something that's still a concern for Canada? And if so, how do we go about fixing that?
I think this policy is actually showing how we can fix it, right? So we actually bid on an ISED project with TMU, where we're building something that Canada can actually own and operate at the same time, right? So the operations can't be tied to offshore. It's got to be the growth of it internally as well. And so countries or companies have to be able to offload that operations to the sovereign nation, which is what we're seeing through the policy of it.
The government also investing $1 billion in public supercomputing capacity. Can you maybe explain further exactly what that means and how important compute access is for researchers and startups as well?
Yeah, so there's two sides of supercomputing. The first is like everybody talks about training. Hey, I've got these crazy size data centers and I've got these GPUs and I need to go train a model. So I've got this big mathematical input and output that needs to be trained. After you go off and train it, you got to use it somehow. You don't necessarily use the same compute for it. You may want to use it in different ways, or you may have different compute for it where everybody talks about inference. Here's an example. One of our partners comes out of South Korea, and Canada has the capabilities to do this as well, where when we look at the inference side of it, you need to go deploy that so other researchers, other industries, as well as other innovations can come out of that. And so that's something that we're actually deploying internally as well, where we look at how you deploy infrastructure and how you connect all that infrastructure together, even if it's smaller pieces, so it looks like one big massive compute. So supercomputers are really tied to two different things. There's one big centralized view of it, and then there's a distributed view of it as well. And so we're pushing the distributed view of it so that everyone has access and equity as part of it.
It requires a lot of power, though, right? Like, is that going to be a headwind down the road, do you think, for Canada?
Yes, if you're doing massive training, yes. If you're doing inference, no. So like as an example, we've got a board back here from AMD. We've got these GPUs or inference cards that actually run, and we can deploy these, what we call cabinets, locally at like telco sites, or where you see the little telco operator sites. The reason that that are really good deployment models is because there's power, there's infrastructure, there's reliability and resilience to it. And then if you deploy these compute nodes in those areas, you can actually build that that's already there. There is enough power and fabric in those places for these types of initiatives.
Got it. I love that you have the show and tell, because sometimes it's hard to know exactly what all this stuff that we're talking about actually physically looks like, right?
Definitely. We're in it day in and day out. So like if you can't build it, if you can't touch it, it's hard, right? Everybody talks about like compute, but what the heck is a computer? And now they're throwing the crazy world around tokens. Like, what does that even mean? It's very challenging. And so like we definitely, having these conversations can definitely help with that.
Yeah, it's hard to know sometimes what everything actually means. When it comes to Canada's approach compared to what we're seeing in like the US, Europe, the Middle East, how do they compare, do you think?
If you would have asked me this actually like a year ago, I would have said they're a little bit behind. When we're looking at the initiatives today, they're on par with what we're seeing actually globally. We've got deployments that we're talking through actually in the Middle East today, where it's very much aligned to how you actually build a sovereign solution, where sovereignty is, yes, they know that they don't own everything, like they don't manufacture everything in-house, or they don't have the chips in-house. How do you get it so that they own and operate? So as of today, now what I see with the Canadian perspective is Canada is actually very much a front leader. And they're a front leader because they do two different things, actually. So number one is we've already invested in Canada. Our power supplies that we actually have that comes in for our little nodes are actually manufactured in Toronto. We have an amazing network in Canada, and Canada should actually see that and be very proud of that. I know I am, as a Canadian living in the US. And so I think that's like they actually have, Canada has a leg up across many countries that we see, that we speak to today.
Sami Kibria, CEO, co-founder of FlexGrid.Cloud. A final look at how we ended the day on Bay Street and Wall Street. The TSX Composite bouncing back a little bit after Friday's deep drop, 65 points up today, or 0.2%. The S&P 500 up 22 points, we'll say, 0.3%. And then the NASDAQ up 220 points today, or 0.9%. A quick look at oil, which has been jumping around today out of news in the Middle East. West Texas, this is July contract, sitting now at 91.27, so a little bit up on the day. Thanks for joining us today on The Close. We'll see you back here again tomorrow.